So should we get started? We got lots of people watching. Thanks so much to everybody for joining.
Yes.
So ladies, Orangeville.
Bananas.
Why?
Shall we preface with, we're going to go over the stats for January, but the last 2 weeks or week and a half so far in February has been, okay, no problem. We'll make sure that we mention that then when we talk about next month, okay? Anyway, the last week and a half, so the start to February, the numbers that we're going to talk about for January are almost completely irrelevant already.
Totally.
Thanks, guys.
So, shoot, tell them this really interesting news. What's happened in the last week and a half, ladies?
Just bananas.
Yeah. Go ahead, Sarah. Go ahead.
Sorry, no, I just wanted to say that I'm shocked and mind blown again. I didn't think this could keep happening, but we've got a townhouse that went for over $1 million. We've got a semis going for over $1 million. Like, I thought things were starting to cool down a little bit when I went to a couple houses this past week and offers going in. There weren't crazy amount of offers. It seemed fairly reasonable. And then you get this left field, like, craziness. And yeah, I think there's just no way to make sense of what happened with the semi and the townhouse this week.
No, like when we last were together, we were shocked that the sale of $950 for the townhouse happened. And then for something to sell for more than $100,000 above that within a couple of weeks. Like there really
it was very nice. It was nice.
Yes, it was. Yeah.
And I think they had done some like upgrades, but I think it really comes down to what we've been saying for months. It's those houses that are like knock your shoes off, like gorgeous houses. You walk in and people are just blown away by emotion. They're like, I have to have this house. And we're seeing crazy numbers and you can't predict that.
Move-in ready, no extra money having to be spent or time and energy because everyone's a little weary of renovations right now, right? It's hard to get tradespeople. It's hard to get good tradespeople. And then when you find them, the cost of the actual supplies and stuff is out of control.
And also I think with Jacqueline, you've got somebody that's experiencing like just the timing of getting stuff, like the delays after delays of getting stuff in. And that's been happening since the beginning of COVID. I've had friends do renovations and months on months just waiting for kitchens to come in. Like it's not easy to reno right now.
No, sellers definitely have to get creative if they're looking to do renovations before they sell, because I'll just say I have a listing coming up shortly and we've been planning it since October. And her trades just kept getting delayed. Lumber was a really big issue for a while. So that's a big gap. Thankfully, the market's still really stable. So I think it's going to be in her benefit at this point, but it's just crazy. So for a town to now have gone for $1,058,000. There you have it.
Come on.
And I just want to clarify the other one on Victor Large that just sold from, they announced the price yesterday. It was a detached, but a linked home. So like a kind of a hybrid for those who don't know. It's not a semi, but it's not a fully detached. The foundations are joined. And that ended up going 200 over ask at 1.225. Bananas. So,
and honestly, like my experience or my conversations that I'm having with not just you guys, but all realtors across the board and just being like, what is happening? Like this needs to slow down. And I think everyone is in the same boat. I haven't come across a realtor lately that is like, yeah, I'm really enjoying this. This is great. Just having no idea what's going on.
It's so fun.
Yeah, like we are always working in the best interest of our clients. We're trying to guide them with comparables and thinking, okay, what's within your budget and making sure that they're going to appraise, yada, yada, yada. And then you get this like, holy smokes, where did that come from offer? And you're wondering like, was this just the client that was just wanting to put in no matter what happened, they just threw everything at it? Or are they being guided by realtors to do this? Because I certainly haven't talked to a single realtor that thinks that like this makes sense.
From my own experience, the buyers are driving their own. I mean, we ethically can't really steer them either way. We show the comparables and you make your choice. But I think you hit the nail on the head, and it's sort of finally becoming a more general conversation, appraisals. But please, we got to throw this out to all the agents that are watching. If you are not explaining appraisals in this process to your clients,
yeah,
it's
Shame
a
on
lawsuit
you.
waiting to happen. You have
Yeah.
got to explain to them that there could potentially be a huge gap between their appraisal and what they've paid. And for those who don't know that are watching, that difference, if the bank doesn't appraise it what you paid for, you're cash out of pocket.
Hope you saved your pennies and didn't blow it all in what you put up front.
Yeah.
I still am flabbergasted though that the way that the market has gone for the last 2 years, really now, that we're not hearing more of this though. Like, we're not hearing more deals falling apart. So it's like, where is the money coming from? Where? How
It's
is
a
it
lot of, from just the chatter that I hear, the buyers that we talk to, because it's a common question that I'm asking, you know, okay, great, you want to offer this price, but I got to do my due diligence to make sure I'm bringing forward a legit offer.
Yeah.
So where is it coming from? And it's friends and family. It's a lot of multi-generational families that they're now branching off. And I think that's going to be the way of the future for a lot of people.
Yes.
Is, you know, you combine households for a while. I think Sarah's just welcoming one of our guests.
Let me, while we're talking, sorry to interrupt you, Jacqueline, let me add Samantha as well.
Perfect.
And we'll get everybody on here.
So real quick, while we're doing that.
Hi, Samantha.
Hi, ladies.
Thank you for your patience. We ran into some technical difficulties. We're like, how's this going to work?
Don't we always? It's always.
Can you hear me?
Yep.
Yes.
Okay, good for you. Yes.
And Sergo just came. Yay!
So
He's taking
literally
the band
ran
off
down the
the
road
note.
to come and meet with us. we
Like-
realized that the maximum we can have is 4 screens, and we're like, oh no, this isn't going to work. How are we going to do this?
do?
Funny, I was actually going to come into Orangeville today too. I was going to go to my office to do this, but I mean,
No, it was literally a call to Sergo at 3 minutes to 11. I'm like, run.
Thank you, Sergo.
Appreciate you. So just quick before we dive into the mortgage stuff with the two of them, we'll run through this real quick. We had 44 active listings in Orangeville, 36 of them sold, and days on market is down to 6 in Orangeville. So things are moving really quickly. Towns on average are 893,000. Semis on average have gone up to 839,000, and detached, of course, still over the million mark at 1.174.
Yep.
And our
So-
inventory still fast moving, fast turnover inventory with only 6 days on market. But I'm just pulling up right now, and as of today, there's 10 freehold properties available.
Yeah, and we've already seen, like, January we did so much better than we did in December, but it's still not enough. And that's what's driving this 6 days on market. So, oh my goodness, if you are a buyer and you are not on a drip campaign receiving listings from an agent,
Yes.
you're never getting a house.
Yes.
Please make sure you get in touch with your agent, because we have the ability to send you a listing. Like, if someone hits submit for a new property, we can email that to you immediately, and that's the only way you can compete in this market.
I think it's also funny, Jessica's reel that she put last week, where we're like sitting there refreshing every 30 seconds. So if
It's
you're
so true.
possibly looking, let your agent know, because we're there, we're refreshing.
Yeah.
Yeah. And the creativity on agents now too, to try and generate some properties for buyers, is we're getting really creative. There's a lot of agent communication happening, because I think sellers are a little frustrated too. They don't want all of this traffic through their home, or necessarily to have to go through the whole process. So if you can do an exclusive deal or something like that, those are some options too. Shelburne was, it always seems to be opposite of Orangeville. But we only had 11 active listings in January. That just, of the 11, 9 of them sold. Townhomes are up to 832,500. Semis went down, and again, the semis in Shelburne, it's hard to map. You have really old ones or brand spanking new ones. So only one sold. It was an older one, but it went for $725, which is great for what they would have originally paid. And detached is up to $953. We had a huge jump in detached prices in January.
Yeah, because I think even like, let's say 4 months ago, you weren't even seeing them really hitting that 900 mark. It was like almost lower.
It was still in the eights in December. So that's that. Quick note, we have heard after the last council meeting for Orangeville of a bunch of new high density projects that are in the works and are being submitted to town for their applications. So it's coming. Orangeville is going to see some major change in the next few years. Our council and the politicians are aware of this housing issue because it's not just us, it's everybody. I mean, it's province wide if anyone watches the news. But we are starting to see there are currently 3 potential applications that are going to be put forward for high rise, high density, either rental units or apartment condos.
But with that in mind, they're going quickly too. So if that's something you're looking at, like get on the horn with your realtor, start making calls, like just be in the know of when those are actually going to release. And we are seeing the ones up on Broadway by the bypass, and there's not many left already, and those just got to happen.
They went hotcakes. Yeah,
they grow fast.
Yeah. All right. So that said, unless any of our viewers have questions specifically about these stats, let's get into the really fiery news that's going on right now, mortgages. So we have Samantha Powers. Thank you for joining us. She's from the Mortgage Center. And we have Sergo Rica from Select Mortgages here in Orangeville. And we just thought it'd be really cool to have both of you on to show different perspectives. Both of you are brokers. And we just love to hear what your thoughts are on this super fantastic market. So question number 1 we had come up with, just spitballing, was the news is wreaking havoc right now with trying to promote fixed rate mortgages. They are literally telling people to go to their bank and try to lock into a fixed. I don't care who goes first, but we would love your input on that.
Samantha, you can go first. It's fine. Give her a brother.
Such a gentleman.
Thanks. You're right. So the news has made this the amount of calls that I got when the, rates are going to raise by 500% this year, go lock in. Fixed makes your banks so much more money. And the variable rate right now, I mean, you can get a variable rate at 1.45%. Your fixed rates are hovering, let's say, they kind of hover all over the place, but let's put it at a 3%. By the time you're going to hit a 3% variable rate, you have to go through a good amount of rate climbs, like rate hikes. And there's no denying it. They're coming. We've all been pre-warned, but you're not going to jump from your 1.45% today to 3.45% tomorrow. It's just not going to happen. They will not jump rates that high that quickly. Variable has shown for forever that it is always the best way to go. Rates go up and they come back down. Did anybody expect us to hit a pandemic and go down to these rock bottom rates?
To negative rates? No.
Right. But guess how happy those clients are that are sitting with a 1.3% interest rate, and they have been for 2 years. All those clients that are sitting in the 3.5 interest rates, because let me remind you, prior to the pandemic, we were sitting at fixed rates around the 3% mark. And the housing market was still super hot. So for everybody thinking that these high interest rates are gonna, it's gonna kill the market and we're gonna crash and oh my God, what's gonna happen? It's not gonna happen.
No.
And so from your experience, and we'll pose this question to Sergo after too, from your experience in the long run, and I think that's what the news is pushing and people's fear is that after their 5-year term, if they don't lock into this fixed rate, they're going to end up paying more because they're variable. But that is a huge myth.
Variables are going to climb, but you're not going to be to the point where you can't afford it. And I mean, if you are somebody who's already tight with your money, chances are you've called your broker and said, listen, like, I can't afford this increase, a 0.25 increase in March. Your broker then is probably going to work out a scenario of pulling some money out of your house so that you can afford it. And maybe they will lock you in. But my suggestion, I'm not a fixed pusher. I'm a variable. And the one thing that I have, like, I have a certain amount of clients that, you know, they call me and they're skeptical. They've been with their bank for 20 years and they've always been fixed. I had one that just closed recently, and he's a single dad. So, you know, on top of his mortgage payments in life and then his child support payments, he can't really afford to have his payments fluctuating. We have fixed variable payments, meaning there's a variable rate product out there that your payment doesn't change until it hits a certain trigger point, but the lender will adjust it on the back end. So you're not seeing increases every time the bank increases the variable rates.
So in your experience, it's more the fluctuation of payments that concerns people. But what I just want to make sure we get across is that you actually are still, regardless of the fluctuation, you still end up usually saving money sticking to a variable.
Absolutely.
So Sergo said that he's a different approach. Love to hear what your approach is.
Yes.
Yeah, I'm more into the fix right now. I mean, the only issue that I have right now is just the inflation rate. That's the only thing that's like burning in the back of my mind is, yeah, usually interest rates go up by 0.25% every year to 2 years. The problem is if it goes up a full percent within a year, a lot of people are going to feel that payment jump because they all budget for a fixed monthly payment. You know, I get paid, I put $2,000 towards the mortgage, I pay my car payments, and then everything else goes to savings and then expenses. So for someone to go from, let's say, $1,800 one month, $1,900 the next, $2,000 the next, to, especially right now in the market where everything is kind of at the very max of what they can afford, $100 every month change, it's not a big deal, but if your budget is so tight that it might change the factor, right? So for me, I usually tell them, if you go with a fixed, let's say it's about 2.5, variables 1.5, that 1% can only maybe last you a year to two. The problem is with inflation right now, it's through the roof. And I don't know when it's going to stop. And the only way to stop it is increasing the prime rate. So that's the one problem that I usually have when it comes to variable. I mean, I do agree that variable is 99% the cheaper option, while we're in the 1% right now.
Now, I'd like to also pose the question to both of you, because this obviously depends. It's a case-by-case basis. But if the buyer is not looking long-term at a property, if they know this is only going to be a 2 to 3 year property, does that change your opinion, Sergo?
And that's what I was going to say, right? So, I mean, yeah, we're talking in general terms, obviously, what's best for the long run. But at the end of the day, it depends on what the buyer's looking for. So if they're thinking in 2 years' time, I'm going to buy it, renovate it, live in it for 2 years, sell it, and move to another house, then it doesn't make sense to go on a fixed 5-year term because the penalty might be higher. So it's case by case. I mean, at this certain time, I go with a safer option in regards to just payment management. If they're thinking, you know, I want to pay down my mortgage as soon as possible, I'm going to make prepayments, I'm going to make lump sum payments, then variable is the way to go, obviously, because you're paying a lot less right now.
So with both of yours, could you not go with with the fixed variable where you can actually like sit and would that be a solution for a lot of people? Because I didn't even know that was a thing until I talked to Samantha a few weeks ago.
Yeah, so that changes your amortization schedule, right? So that's all that is.
Okay.
So, but again, like, I mean, Sam and I probably watch it all the time. You see people that come in, and there's never been the same story that happens twice.
Yeah.
Some people think they're going to live in that house forever. Some want to keep it for 6 months. Some, like, with the market right now, it's just hard to tell who's going to hold on to that house and for how long.
Right.
And So one of my main reasons is 60% of Canadians break their mortgage by the 3-year mark. Nobody stays in a 5-year term. Actually, I just had a client call me the other day that was not like an original client of mine. She's like, my mortgage is coming up for renewal. And I'm like, what do you mean it's coming up for renewal? And she's like, yeah, it's coming up for renewal. I've been in this mortgage for 5 years at 3.79%.
Oh.
Yeah.
Wow. Oh, that breaks my heart.
Exactly. If she had tried to break, I mean, she obviously didn't. She was a first-time home buyer. She didn't go through me 5 years ago, but she has been throwing so much money out the window. And on top of that, if she had tried to break, yeah, the penalty would have been pretty significant over these last couple of years because it would have been an IRD penalty. Your variable, you're always 3 months interest. So I can tell you a ton of my clients are repeat clients. And when they get that 3-month interest penalty on a variable rate mortgage, it makes a world of a difference with what they're able to do, whether they're selling or refinancing to buy rental properties or whatever.
Now, would that client have been with like a bank versus a broker?
She actually came from another broker.
Oh.
But like that being said, 5 years ago at 3.79, that could have been
A great deal.
a good rate.
Great deal. Yeah.
Right? But she wasn't kept up in the loop that you don't have to stay in that 5-year term. And when this pandemic hit, I had a ton of clients asked a 3% rate. I called them all and we broke every single one of their mortgages. Some of their penalties were $28,000 on their IRDs. It still made sense to pay it and take a lower rate.
Yeah. You're still saving money.
Tons of money.
Yeah.
And that's the great thing about the two of you is you're always constantly posting those reminders to potential clients and past clients that like refinancing is a thing. You can do this. This is what rates are right now. Just like big red flashing letters. If you're not taking advantage of this, then get up and make a
I'm going to be a
phone call.
little biased, obviously, but on the broker end, I mean, Samantha and I both know is that we follow up almost every year with our clients.
Yeah.
Whereas if you go to a big bank, they kind of give you the mortgage and they're like, okay, we'll see you in 5 years. Thanks for trying. Whatever the rates do in the meantime, they're like, oh, well, no big deal. It's a 5-year term. Right? So in that 5 years, who knows what could have happened? Who knows how much you could have saved?
Right.
So you should do your financing almost every year, but, majority of the banks, they don't really look into it, right?
Your mortgage should be reviewed annually because so much can change. I mean, in interest rates and your life. Like,
yes.
Now, can you
high interest debt? Why? Why would you carry 19.99% interest rates on those credit cards when you can be paying 1.45% on them?
Yeah. And can you guys just clarify too, because this is something I hear all the time, and I know we have each individually talked about it, but may as well keep striking it home. If someone calls you and says, hey, let's take another look at my mortgage, it's not always the case that they have to pay you out of pocket as brokers.
It's 99% of the time it's free.
Yeah.
Do you want to just touch on that a little bit as for all the people watching who might not, who are those bank people and
So
might
I'll let you go first.
be interested on the broker route? Because
I mean, realistically is if you go to the bank, the people that work for the bank get paid by the bank. So they're working and helping the bank make as much money as possible. Whereas Samantha and I, we get paid by the bank, but we have 20, 30 lenders that we use. So we're not really tied to a certain bank or lender that we use. We can pick and choose whatever fits best for the clients. Right? So that being said, until the deal funds and you have the keys in your hand, we're not getting paid. And that's just how it is. It's commission based, right? So it's how it works. So when people come in and they're like, oh, what do you guys charge? I'm telling them, we don't charge you anything. What do you mean? Like, well, when you walk into a bank, what do you pay them? They don't pay them anything, right? Because the lender handles all the payments. So for us, we want to get you the best term, the best mortgage, and the best rate, because at the end of the day, the clients come first, and then lenders come second.
yeah, it's like walking into a Saks Fifth Avenue, being your bank, or going to like a shopping mall for a broker. You've got all these other options, or you're limited to one.
Yeah.
So
You don't have to fit in one lending square with us. Like if you don't fit here, you'll fit over here. If you don't fit there, guess what? We've got tons of more options where you'll fit.
Yes.
And I think, Sam, I like the conversation we had because I've always worked with TD myself. I never really like knew the difference between a broker and a bank when I first got my mortgage. And it just became habit that I stayed with the bank. And looking back, I know, right? So now looking back and like going through refinancing recently, it was just like, I wish I had gone to a mortgage broker because I feel like you guys have all these different banks and different options. To your point, Samantha, that you guys are actually trained and you learn and educate yourself on the financing aspect of things, whereas perhaps when you go into a bank, that individual doesn't have the same level of training that you do, and you have the means to be able to push for your client, which is great.
On that note, your bank mortgage people, they started off as your tellers.
Yeah.
And they just worked their way up. They don't have to go through licensing. They don't pay for licensing. They don't go through course renewals. They don't do any of that. We had to complete a course. We had to complete exams. We had to pay for our licensing, which we also have to do every single year. We have to rewrite our exams every single year and pay for our licensing every single year.
Ew.
Like, we are taught from the bottom up, like, this is all we need to know about mortgages. We know the ins and outs. The people at the bank, they're under the bank's mortgage program. So they don't need their license. They're not
Not to
licensed.
say that they're not great people and
They're amazing.
Yes.
But they're not.
For any bank people listening.
They're not
Yes.
taught, right? Like, they're taught what their bank can do. Like, check this box, check this box. If this doesn't say approved, they're not approved.
Yeah.
We
Yeah.
literally went to school for it.
Yeah.
Okay, next topic. This is going to be a fun one.
We just bashed the poor banks. We're going to be calling me like, we're taking your mortgage away.
Yeah.
Let's look at it as not as bashing the banks, but as educating the home buyers or
Yes.
current homeowners about their options.
Because I really don't think people understand the differences. Because I didn't. I didn't know the difference.
Right.
So I think anybody that is thinking of getting into it, call some mortgage brokers. And what I always say to my friends, like, call a couple and see who you jive with. Like, it's like a realtor. Do your research. Check out the people and make sure that you understand what they're saying, that they can talk at your level, that they sound like they're actually going to work for you. Because I mean, it's a big investment. They're just as important as us.
Just so you know,
Maybe more.
if you like TD, we can't put you with TD.
Yeah.
Yes.
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 Absolutely.
There is
Good point.
some comfort level there with people, right? Like, that it's something to be said. Yeah.
I also just want to bring up too, the fact that going into your bank just to ask a question, and this is something that in real estate is so important, is the relationship between us as we are helping clients get into a home or sell their home. And I know from my personal experience, communicating with a broker like these two that are so well educated and they know their shit. Like, they know their client's file in and out. You can call them on a Sunday afternoon, not that they want you to, but if you have to, they know what they're talking about. So it helps us, which ultimately helps the buyer or the seller immensely.
Yeah.
You know, when, especially in this market, and they can't legally say, sure, you can go in firm, but we can surely go through their file with a fine-tooth comb and work together to see, okay, hey, quick flip, is this particular property gonna qualify or not? Just based on location and the write-up, because a lot of people don't realize that even the write-up can completely screw up your chances of getting financing on a property. So that communication is so much better and more streamlined and comfortable versus calling a major bank, because you're stuck to their hours. They have no idea what the file is. So then it's okay, you're on hold for 20 minutes. That's just my personal experience, and I wanted people to know.
I agree with that, Jacqueline.
Can I ask you guys a question? Because you're on the realtor side of things.
Yeah.
When you guys are putting in descriptions, you know, great for first-time home buyers, great for investors. I mean, does that really impact the amount of people that come look at a property?
How about handyman special?
Handyman special, you know what I mean? Like,
Hobby farms.
you see that, I'm not sure, like on your end, do you see any big difference on having a handyman special?
I think for me, it's like a red flag. Like, don't bring in my person who wants the like no work kind of house, and because pictures are so deceiving nowadays, you look at a picture and you're like, oh, this looks awesome, but they didn't take a picture of like the giant hole in the wall. It kind of gives you a little bit more of a feeling, and you can say, hey, Mr. Client or Ms. Client, you don't want to do work. This is clearly telling you that this needs work. Let's not waste our time. Let's go look at the houses that are going to work for you. So sometimes a description does help.
But on that note, Sarah, just again for the people listening, it's not only telling the buyer that, it's telling the lender that.
Yes, yes, exactly.
Because
that's where we talked about this recently. Like, it's be very careful of how you're putting your wording in, because hey, I just went over 150,000 over list price and now I can't get appraised because.
or if you really feel so inclined, if your seller says you must put it in there, put it in the broker remarks.
Yeah.
So we can at least print off like the edited version. Because along with your application to the lender goes a copy of the listing as a package. So they see all of that. And I've seen it kill deals.
Yeah.
So
I think to speak to your frustration, Sergo, from a marketing's perspective as in a realtor role, I think for us, putting those things in the description is just our way of really pinpointing the ideal buyer. Like Sarah said, it's weeding out certain people, or it's making sure you're hitting a specific demographic to attract the perfect buyer to that property. So we don't, no ill will is meant. It's just, from our marketing perspective, we're trying to do the best.
And again,
for
it's
our
just,
clients.
it's just where to put it, right?
Yes. Yeah.
So not in the client remarks, not in the extras, because the extras are public.
Yeah.
It's got to go in the broker remarks.
Realtors take note.
Yes. Yes. Okay, guys, 5% down is only for first-time home buyers. Go.
You can take this on, Samantha.
5% down is not just for first-time home buyers. 5% down is for anybody purchasing owner-occupied property with a purchase price of $500,000 or less, which is not heard of anymore.
Yeah.
The government came in and made a few rule changes, and if you were purchasing over $500,000, the amount of that you would need as a down payment, anything that exceeds that $500,000 requires 10% down. So let's say you're purchasing for $750,000, you would require an additional 10% down on the $250,000. So 5% all the way up to $500,000, 10% on the additional amount.
It's like property tax. It's tiered.
It's tiered, and anything over $1 million, you cannot put anything less than 20% down. So all these $1 million properties, nobody's buying them with 5% down. It's not happening. But the 5% down is for literally anybody purchasing owner-occupied property. It can be your first owner-occupied property. You can own a home and buy like your cottage or like your second vacation home for 5% down, as long as you qualify in that $500,000.
So, but that could be like, there are still condos available for under 500,000. And you can still go to Timbuktu and buy, a decent property for under 500 if you're willing to commute or live out there. But it was just something when talking to both of you, you both kind of mentioned that that's a huge myth. So Sergo, what's your 2 cents on that?
The only thing with a 5% down is what a lot of people seem to misunderstand is that you actually still have to qualify for the mortgage. Just because you're a first-time home buyer doesn't mean you can only put down 5%. You actually have to qualify for the mortgage at only 5%.
Well, otherwise 5% of what?
Yeah.
Right, so that's, I'm sure Samantha gets this question all the time. Hey, I'm a first-time home buyer. I'm looking to buy 750. I make 40,000 a year. And then you tell them, well, you don't qualify for 5% down. They're like, well, I'm a first-time home buyer. Like, fair enough, you are, granted, but you also have to be able to afford that mortgage at 5% down.
So
And
in
is that
scenario,
because, no, go ahead, Sarah.
just in that scenario, what would be the typical amount they would have to put down to qualify them?
That's tough. It depends on their income. It depends on
Debt.
property, taxes, everything in between. So.
Don't buy trucks, don't buy cars.
Oh God, don't buy boats, don't buy dump trucks, none of that. That it all happen.
Samantha just put up a really good Reels. You put up so many, I can't remember when it was. A couple days ago about that whole process. Now I can't remember what I was going to say about it. Oh, the first-time homebuyer program, because that was a thing for a long time. I feel like we sort of all just got educated on it, and they've taken that away for like a while now, haven't they? The first time home buyer incentive program.
Hard to.
There's still programs. I'll be completely honest. I'm not too well versed on them anymore because everybody just literally has to have either a co-signer or